coming in on Phoenix Mills, but let's shift focus and let's talk about Happiest Mind and let's see how the company performed in the quarter gone by. If you see on a quarter-on-quarter basis, the PAT saw an uptick about 2.1%. The revenue saw an uptick, rather the revenue was flat on a quarter-on-quarter basis on the positive side, but it's the EBIT margin that declined by about 61 basis points on a quarter-on-quarter basis, while even the EBIT also saw a decline about 2.9% on a quarter-on-quarter basis. So let's try and understand, actually in a short while we'll be joined by the management, exactly what transpired in the quarter gone by, given the fact that the stock is now reacting or rather negatively reacting to its numbers, given the fact the margins also has seen a contraction on a quarter-on-quarter basis, a 4.6% downtick coming in for Happiest Minds as we speak. But let's bring on board the management of Happiest Mind. We have Venkatraman Narayanan, who is the MD and CFO, as well as Joseph Anantharaju, who is the Executive Vice Chairman as well as CEO, Product Engineering Services at Happiest Minds. A very good afternoon to both of you gentlemen, and thank you so much for joining us on ET Now to understand more on the quarterly earnings. Venkat, let me come first to you, and if you look at the revenue growth rate, it actually slowed to about sub 1%. In view of this, do you actually still maintain your organic growth guidance of about 12%?
As of now, we are holding on to that 12% growth. If you notice, 9-month over 9-month constant currency, we've grown by about 11.5%. And a quick calculation suggests that we have to do more than 4% in Q4 to get to the 12% number. The things that we are considering that will go in our favor is obviously the higher number of working days, because we're talking about the short term, the now and here. So the now and here are about 3 more working days. And we have to also see how the new signups that we have done for the last 3 quarters begin to, start firing in terms of business. While I say that, while we are expecting to do well, there are some of these little small uncertainties, and it doesn't take too much to, for some things to slip from one quarter to another. But largely, the growth trajectory is intact. We had made an estimate, if you recall, about 9 months back, and come back and said we'll do 12%. And we have not touched that number because we believe it acts as a guidance to not only the markets, but also to us to push ourselves to get to that number. So I could have very well said 11 to 12%, like typically most companies said, but we stuck to one single number. And the hope is to make sure that, not the hope, I would say, the effort is to make that happen as we progress into the fourth quarter.
Good afternoon, gentlemen. This is Vinny joining in the conversation as well. And Joseph, this one, if you could help us just understand in terms of how is the demand on ground currently? What is the scenario on that front?
I expected the budgeting decisions to get moved from December to January. And so far, we are still seeing customers holding back on their decisions, trying to get a better view of how the market would progress. If you just look at some of the verticals, I think the ones where we are seeing more traction. If you look at healthcare, it's seen a good growth quarter on quarter, and we continue to see the pipeline develop quite well in this segment. Manufacturing is surprisingly another area where we are seeing good growth, as well as number of opportunities that continue because of just the overall scope for customers to bring in more automation, to bring in more IoT orientation, and hopefully have some Gen AI cases. The other area that where we are seeing traction is in the CPG market, retail CPG market, especially on the CPG front, because of more of customer experience, engaging with customers, using more of analytics and AI. And the vertical that still continues to be very cautious is high tech. And in EdTech, I think the higher ed subsegment is again being cautious, just given the nature of the university and the enrollment. Whereas the K-12 and workforce development, those are areas where where we are seeing some opportunities, and we are diversifying our focus into these sub verticals, as I would call it. From a geo perspective, just to quickly add, we had 5 logo closures in India, and we are continuing to see a fair bit of traction in the India market.
All right, let's talk about acquisitions then, gentlemen. By when do you all expect to close one? And also let me add to that then. How many deals are actually there in pipeline?
We have about 3 deals active in the pipeline and many more. We are evaluating a few more. So, this is a continuous and an ongoing process. We would have liked to close at least one of these much earlier. Don't want to hurry into some of these things. There is also a certain bit of rigor that we go through when we assess companies to partner with, because this is something that you have to do for the long term. So typically, I'm sure you've heard all of this before, but we have been a little bit careful, cautious while we get into acquisitions. But the ones which we are today in discussion with, we are hopeful and we are quite upbeat about the possibilities of a closure, and we'll surely come back and you'll be the first ones to know from us.
Venkatraman, just to follow up on that, any more details or color if you could give us on which segments or geographies you would look at augmenting through the acquisitions?
We continue to look at the US, India, Europe, India axis, typical companies, software companies which have got a reasonable sized offshore base. Because over the last few years, what we have seen as a company which has got a reasonable offshore presence, I'm not talking about India presence, but an offshore presence, reflects on the stability and growth trajectory of these companies. There is investments that have been made to get some capabilities on the ground, and they are working in a model which is similar to what we are doing. I'm not talking about what we are doing, but it complements us from a business standpoint. So that's the kind of companies that we continue to look at. So largely, we're not looking at on-site companies. Some of these companies which have got high growth rates but are struggling with profitability may not be aligned with us from a vertical standpoint. These are the companies that we are careful and staying away from, and looking at companies which are more aligned to us both from a vertical standpoint, or at least they complement what we do in our verticals and are digital and focused in certain areas and have good customers.
All right, Joseph, let me finally ask you, will the furloughs actually continue to extend in Q4 as well? And also if you could tell us how the Gen AI opportunity is panning out, particularly for your company.
Sure. So, as you pointed out, there were quite a few furloughs, and that, if you look at the industrial segment, the revenues that we reported, some of the drop can be attributed quarter on quarter to the furloughs. But what we've seen is that, come first week of Jan, all the furloughs that we had experienced, the people who were on those projects, they're back on billable assignments. And so we've not seen that getting extended into Q4, fortunately. Right? And coming to Gen AI business services, we continue to make excellent progress out there, both on the capability building and the discussion with customers. So I'll take up the discussion with customers first. We had built a set of use cases, both horizontal and vertical, at the end of Q2, beginning of Q3, and those are the use cases that we've taken to our customers, getting a lot of traction, both with existing customers and new customers. And as we speak, in Q3, we had something like 30 or 40 conversations with customers, and quite a few of them have resulted into customer engagements, where we're helping them. And they're starting more with consulting assignments and POCs, working jointly with customers. And here, unless it's a horizontal use case, we need a fair bit of domain expertise also to be brought in, because the technology is being used to either automate or enhance a process, and that's why there's good collaboration going on between domestic domain and the Gen AI business services.
Okay, gentlemen, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the outlook of the company going forward as well. That was the management of Happiest Minds for you all, giving that the guidance at 12%, maintaining that guidance of 12% of organic growth. But let's slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.